Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. Let me show you what is going to happen today. And I have really nice trading setups for you. So almost everything that we said yesterday worked out. I even think that everything. So that is going to be a great daily analytical report. But if you're following us for quite a long time, you know that we are very often right, so it's not like this that it's something exceptional. We are very often right, so you can rely on us. Anyways, so we do have a positive sentiment for euro right now. We do have, at the same time, we do have negative sentiment for dollar. Overnight, we got the data from Australia, and retail sales came slightly better than expectations. In 29 minutes, we are going to have a data from UK, very important data, manufacturing production, industrial production, and GDP. So definitely we should expect some higher volatility on the market, and inflation we'll have in 4.5 hours from United States. Also interesting influential data for the American dollar. And about Friday, that's basically it. As it is the last day of the week, maybe you want to open something and keep it for the next week. Keep it open over the weekend. You need to know what is going to happen on Monday, for example, because overnight we will have trading data, import-export from China, we'll have industrial production from Eurozone. And so that will be quite a busy day for Monday, because usually Mondays calendars are empty, but empty calendar will be on Tuesday, apart from the voting on Brexit. So this will be definitely super interesting for the British pound. As for Wednesday, we will have inflation from UK and retail sales from US. On Thursday, inflation from Eurozone. On Friday, we will have CPI inflation from Canada, retail sales from UK. So not the busiest week on the record, but every day we will have something. With that being said, let me show you the charts, because everything is in charts and you can read all the fundamentals, all the sentiment you can get from the charts. On the New Zealand dollar to American dollar, we do have new weekly highs. As you can see, actually we are on the highest levels since the middle of December, and we were expecting this, and you can check this that we are saying about the upswing. Why would I have an upswing? Because there is an uptrend and the price was making trend continuation patterns. So a flag, and then a wedge. After the breakout of the upper line of the wedge, we had a small correction here and the price went higher. So we were warning about this yesterday, 2 days ago, and this is actually what happened. We are extra happy with this. On New Zealand dollar to American dollar, we do have a positive sentiment, but we do not have a proper buy signal. Why is that? Well, there is a buy signal, but with not a good risk to reward ratio. When you're a trader, you don't only focus on the direction, but you focus also on the risk to reward ratio, because you want to open the positions with the best reward and the lowest risk. So in this case, stop loss should be somewhere here, and as you can see, the take profit is on those stops, so it's not the best risk to reward ratio. Like the stop loss is on 60 pips, take profit is on 130, that's 2 to 1. Well, it's okay, but still I would do better. I would find something better, but this local support seems like a good one here, maybe the most recent price movements, not those. Here you can see that this is an interesting area and it should be protected by the buyers. Next one is Euro to British Pound. Euro to British Pound, we do have a sideways trend, and still locked in the sideways trend. Yesterday we tried a breakout, but we got a bounce. Today we tried a breakout as well. We'll see where that will get us. But as long as we are inside of this symmetric triangle, there is no trading signal whatsoever, and the price can go equally up and down. So for a trend follower like myself, that is the worst place to trade. I don't like sideways movements. I don't like tight ranges. I like them when we have a breakout. So once there is a breakout from the tight range, there is a proper signal. Here we are still inside, so there is no signal for me. But there is signal for me on euro dollar. In my opinion, we do have a nice buy signal here on euro dollar. Let's start with the big picture here. So on a daily chart, the price broke the long-term uptrend line and the horizontal resistance here. Horizontal resistance comes from this support, this resistance, this resistance, this resistance, this resistance. And yesterday I said that most probably the price will test those lows, and the price tested those lows, created a reversal. I have a long position here. My stop loss is below those highs, so in a very safe place, let's say. We still kind of have a second test of this support. I wouldn't be surprised if we get this second test and then a bounce. But this area should be protected. So I think that also this position is really small, like I think 480 euros stop loss. So it's a 0.5% of my, slightly more than 0.5% of my capital. So really low risk I'm taking here. But the potential profit is absolutely huge, because the potential profit is on the orange area. So that's what I'm talking about in terms of the risk to reward ratio. Like how many pips I'm risking here. I'm risking 50 pips, and how many pips I want to get from here is 300 pips. So you can see that this risk to reward ratio is what you should be looking at, what you should be aiming at when trading. Euro to Swiss franc, here I also do have a long position. I also recently opened this. Why? Because we do have a beautiful technical pattern here. So what is happening here is a double top formation, then a breakout. So that's a strong resistance, because these are yearly highs on 2016. Then we have a breakout in 2017, and in 2018 we tested that twice, 1, 2. And the last test was done with a pin bar, and after pin bar we have bullish candle. That's one thing. So a double test of the horizontal support. What is more, we have a dynamic resistance here, which got broken yesterday. And this brings us a buy signal today. Candles making higher high and higher low. That's after the breakout, that's a confirmation of the breakout. And well, this trade has slightly bigger risk, because as you can see, I'm risking 1,400 euros, which is more than 1%, which is almost 2% of my capital. So that's maximum what can I risk. But it's really promising. The setup is really promising, especially in the long term. Like, it's a long-term opportunity. The first target is here on the yellow area, but I think that the price can go much higher than this, at least to those highs, and this is my aim. Swaps are not so bad, because euro to Swiss franc. Actually, let's check the swaps here. Euro to Swiss franc specifications. So swaps are positive for the long positions. Obviously, not very much, but still positive. So I can keep it for a long time. As you can see in the short term, now we do have a pullback, but it's absolutely normal after the upswing like this. So we can get a pullback and then an upswing. I wouldn't be surprised if we get this. Cable. So what cable is having is a double bottom formation, but for the buy signal, what we needed to see is the breakout of the orange area. The breakout did not happen, and instead of this, what we have here is a head and shoulder pattern, left shoulder, head and right shoulder. We broke the neckline. This is blue line, this is the neckline, so we broke it. This breakout of the neckline alone does not give us a buy signal. For the breakout, we need to see the breakout of the whole blue area here. So once we'll have a daily candlestick closing below the horizontal blue area, that will be a proper sell signal. It looks promising. We are not there yet. We have a triple top formation here, 1, 2, 3, which is encouraging for selling, but we are not there yet. Euro to Japanese yen is where I do have a short position too, so I'm a bit hedged on the euro. I have a long position and short position. So what we are having here is a clear horizontal resistance, 1, 2, 3, 3 tests. As you can see, the stop loss is very tight for 100 euros. Breakout of the orange area will be a clear sign for a reversal if it stopped us 3 times, and eventually it will be broken. Finally it will be broken. It will be a clear sign for a drop. As for now, we are below, so the sell scenario is still on the table. It could have been better, but it's not that bad. At least the technical situation here is clear, so a clear horizontal resistance. And if we'll go above, we'll have a buy signal, so I will have to escape from my short position. Bitcoin, yesterday we were somewhere here on our report. That's a beautiful, absolutely beautiful pennant on the smaller time frame. I seldom go on the smaller time frame, but you just can't. That's the beauty. That's absolutely beautiful pennant. Downswing, pennant, downswing, and now we reach this support that I was talking about. And after the breakout of this orange support, we will be ready for the contact with $2,900 for 1 Bitcoin, which for me is the ultimate target for Bitcoin. I'm not saying that this long-term downtrend will stop there. What I'm saying here is I would love to see the price there. What we are having now is a flag. Flag is another trend continuation pattern. So drop, pennant, drop, flag, most probably a drop. It does not look like a reversal. If I had to go for it, I would go with a short position. We are waiting for the price to get to $2,900 for Bitcoin, and it will be interesting what will happen when the price will get there. Canadian dollar to Japanese yen. So yesterday I told you that the drop will be a good occasion to buy because it will improve the risk to reward ratio. And look, I told you that there is an upswing, beautiful upswing, which helped us to estimate this horizontal support here. So still the risk to reward ratio improved a little bit because before this we had this support, but after this bounce we have this support. So for example, if we consider this as a horizontal resistance, so the horizontal resistance is on 200 pips and the stop loss is on 70 pips, it's like 3 to 1. Potential profit is 3 times bigger than the potential loss, which is a good risk to reward ratio, and you can think about opening a position. So yes, it looks quite all right if you ask me. Oil is aiming 38.2. Most probably we'll get there, and we will see what will happen after, and the price will reach 38.2. American dollar to Japanese yen. What we are having here is the price is in a sideways trend, poised to go down, drop, correction, most probably drop. We are below to midterm resistances here. As long as we are below those two orange lines, the sentiment is rather negative. Gold is still in the sideways trend here, horizontal resistance, horizontal support, the breakout of the orange line buy signal, the breakout of the red line sell signal. The ultimate long-term target for gold is $1,378 per ounce. Why is that? Because this price was with us for a long time, starting from 2015 when it was the yearly high. Here, resistance, support, resistance, 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 support, resistance. We can see these prices are absolutely crucial for gold, and in my opinion we will get there. Australian dollar to New Zealand dollar, I have a short position here. As you can see today, it's going really well. Only bearish candles, like almost the same. It looks really interesting, this kind of candles. But this pair is doing this, like here and here. I think that after this setup, after those candles, I could lower my stop loss here. As for now, this is only for €100, so it's not big. It's actually nothing, but yeah, let's protect this trade with lowering 30 pips, 20 pips. We need to leave some space for the movements, for the ask price as well. So I'm leaving here 10 pips. As you can see, the spread is 4 pips, 3 and something. So it's enough, because short position is opened by bid price, but it's closed by ask, so we need to consider the ask price. That's a very important lesson for the traders. British pound, Australian dollar here yesterday. Here I told you that the pair will go short. I opened short position. My stop loss was here. It got activated here, and after this the pair went short. So unlucky stop loss order for me. It should be much higher, but well, you see, sometimes it's like this. So I short here, stop loss was here. I would have already twice as much money as my initial stop loss. So sometimes the price is doing like this, and it happens even to professionals. So keep that in mind, that it's happening from time to time, and it's not like it happens only to you. It happens to professional traders too. S&P 500 is approaching this great resistance, approaching. We'll see if they will get there. Chances for that are quite high that we will get there. I'm waiting for this, and I'm waiting for a bearish price action here. Maybe this will be a great selling opportunity, the price getting to the gray area. Now DAX, I'm also waiting for the price to get to the combination of this green resistance and black line. Bearish price action here will be a super strong sell signal on DAX. Now dollar index dropped 2 days ago. Yesterday recovery, and today we have a drop too. Sentiment is rather negative after we broke this support, this green support, and we supposed to get to this orange area pretty soon. Canadian dollar to Swiss franc. Here we are coming back inside of this line, so we can assume that it was a false breakout, and false breakout can be lethal. If we acknowledge that false breakouts are lethal, what we should see is the movements towards the blue line, and again, it's very probable and possible that the price will get there, but in the same time risk to reward ratio is not so good. 100 pips stop loss, 120 pips take profit. That is not good risk to reward ratio. Euro to Australian dollar, breakout of the orange line should give us a nice sell signal, based on this fact that this resistance is rejected, based on the fact that we do have 2 bearish weekly candles. So it looks like a bearish situation for the euro to Australian dollar. American dollar to Swiss franc, V-shaped reversal, false breakout, V-shaped reversal, bullish engulfing on a daily chart. So many bullish factors here in the same time. False breakout below the downtrend line, or if you will, bounce from the downtrend line, bullish engulfing, two candlestick formation, this and this, false breakout below the horizontal support. This is all positive, this is all bullish, so buying here, stop loss somewhere here will be a great occasion to go long. Also false breakout below the lower line of the channel up formation. This is really positive. American dollar to Swiss franc should be aiming higher soon. Australian dollar to Swiss franc, we said that there is a positive sentiment, positive scenario. The price broke the downtrend line, the price created a triangle here, inverted triangle, and broke the upper line of this formation and is aiming higher. The sentiment is definitely positive. The risk to reward ratio is not, because the price is right now on a horizontal resistance created by this top, this top, this bottom, this bottom, this bottom. So this will be a good occasion for a correction and then maybe an upswing. The correction should not be so deep because there is another support here. So price getting here, bounce from here, and an upswing. That would be beautiful from the price action point of view. So as you can see, many good trading opportunities. It looks really promising. I hope it will work out. So thanks very much for watching Daily Analytical Report now. And now we'll have a short break, and after that webinar about candles. And all the best.